So the US stocks have fallen today as investors digest a batch of big tech earnings while a meeting between President Donald Trump and Chinese President Xi Jinping concluded. We had the mega cap tech giants Alphabet, Meta, and Microsoft each reported quarterly results after market close on Wednesday, while Alphabet shares popped about 3% on the back of strong results. We had shares of Meta and Microsoft tumbling 11 and 3% respectively, as investors grew worried about increased spending outlooks for both Meta and Microsoft. The drop in Meta and Microsoft, as well as artificial intelligence chip giant Nvidia, marked a rotation out of technology stocks in the session. What's the reason? Why did this happen? Because, as you know, tech stocks move according to the interest rates. As interest rates go down, you see the tech stocks doing better. And right now, Jeremy Powell, in his commentary and press conference yesterday, signaled that there is nothing like a done deal as far as December Fed meeting is concerned, whether the interest rates will be lowered at that point of time. It's not conclusive. So, which is negative for tech stocks. And that's why we found this rotation out of tech stocks in the session. So while the tech stocks were lower, bank stocks such as JP Morgan and Bank of America saw gains, as did the healthcare stocks on the heels of Eli Lilly's stronger than expected quarterly results and the rise in guidance. Shares of Eli Lilly were last up 4%. So it was a value day because tech has been leading the market recently. The move from investors is probably a natural, healthy thing, though all signs remain that AI infrastructure spending is extremely strong. Trade was also in the focus after Donald Trump agreed to cut fentanyl tariffs on China to 10%. Now that brings the overall levy on Chinese imports to 47% from 57%. He's reduced it by 10%. As part of the deal, Beijing will work to stop fentanyl coming into the US and will buy the American-grown soybeans along with other agricultural goods. China also delayed the latest curb on rare earth exports by a year. So, to be sure, the other areas such as the export of Nvidia chips and the TikTok divestiture remained unresolved. While China's Ministry of Commerce said that the country is willing to work with the United States to resolve issues relating to TikTok, the ministry did not provide any further details on the matter. So, along with Nvidia, the other chip stocks like Broadcom and AMD were under pressure on Thursday, for the reasons just explained. Semiconductors are the ball that's being batted around between the United States and China. That's just a feature of semiconductor investing. If you want that growth, if you want a data center capex cycle exposure, then you have to subject yourself to that political volatility, and that's just not going to go away in a jiffy. Wall Street coming off, therefore, of a mixed day. The Dow rolled over Wednesday, ending slightly lower after it briefly touched a record high earlier. S&P 500 ended a day flat, while Nasdaq closed up nearly 0.6%. Thursday was quite a reversal, as you saw that these mega cap tech names did, like Meta, retreat quite a bit. So you also, the core reason behind this entire rotation was the Federal Reserve Chair Jeremy Powell suggesting that the central bank may not cut interest rates again at the December meeting, which investors had been betting on. A further reduction in the policy rate at the December meeting is not a foregone conclusion, and the Fed on Wednesday lowered its benchmark overnight borrowing rate by a quarter percentage point. Going forward tomorrow, Friday, you may see some pressure on stocks again in the afternoon session after about 12:30, 12:45. So be careful once again. And among other results, Amazon has soared 10% as the earnings are beating estimates and company posts strong growth. It is also reducing its workforce by 15,000, shows it is very proactive, and it is quickly trying to embrace artificial intelligence and keep its costs under control while working about shareholder value maximization. Another stock that you should keep in mind, which may have an impact later on next year, is Chipotle. Its stock tumbled after the company on its cut its full year forecast for the same store sales. At least 5 Wall Street analysts have lowered their price targets for shares of the chain after it reported third quarter earnings. Reason that it's difficult to call a bottom for the sales given the multitude of factors weighing on demand. In the third quarter, Chipotle's same-store sales rose 0.3%, but the chain's traffic fell. While many restaurant chains have suffered in recent years as diners wrecked by inflation eat out less, analysts were unsure if the chain's value perception contributed to Chipotle's issues. While its burritos and balls averaged about $10 to $11, consumers often assume that its average prices are closer to the $15 entrees of its fast casual peers. We know that the traffic had slowed for Chipotle into the fall, surprised by the magnitude that was reported yesterday and the resulting deleverage this produced. Admittedly perplexed by how suddenly this traffic weakness came about and not convinced affordability concerns are the main drivers here. Inflation is hitting Chipotle, and there is a very good chance they may have to raise the prices to be able to compensate. The CEO Scott Beatwright said on Wednesday's earnings conference call that diners are visiting less frequently, particularly those between the ages of 25 and 35 years old, a key demographic for the company. Same-store sales have worsened so far in October, and the company is now projecting that the sales at the restaurants open at least a year will shrink in the fourth quarter and fall by a low single-digit percentage for the full year. So also, industry-wide challenges are here to stay, not company-specific issues that Chipotle needs to address. Unemployment, increased student loan repayments, and slower real wage growth accounting for inflation are weighing on the consumer spending. So we believe that the brand remains fundamentally healthy and a stable share of customer restaurant wallet, and express a return to growth as the macro improves. Chipotle's weak performance bodes poorly for its first casual peers like Sweetgreen and Cava. So we also saw, therefore, in sympathy, shares of Sweetgreen falling 6% in trading on Thursday, while Cava stock was down 8%. And both are slated to report earnings next week. So we enter Friday with a possibility that the afternoon session may get a little weak once again. To get to know more about the US markets, to join our Prime Plus Telegram group, you can do that by WhatsApping us on 982-086-1044. We'll give you a full 1 week projections of the market, and I look forward to talking with you soon once again. Happy investing. Take care.